You're listening to Robinson Ventures Radio, where ingenuity meets innovation. Today's guests are a women-led capital venture firm known as Être Ventures.
Hillary, why don't you get us started? Can you tell us a little bit about yourself?
So, my name is Hillary Talbot, and I'm originally from Vermont. Flash forward to now, I'm a partner at a venture capital fund. So, how did I get here? It started with helping small businesses in Tahoe because I noticed that they often were struggling with sales and marketing. And then it became helping small businesses through the Small Business Development Center. And then from there, I leveraged that into working with the California Manufacturing Technology Center, all the while being frustrated with the way startup and small businesses are funded. They just don't have enough capital. During this point, while working with CMTC, I was a fundraising consultant as well, working on various ways to get startups funded. And Jenny, through Launchpad, which is a CSUMB program. I met her and she invited me into her venture capital class for professional women only in the first cohort. And from there, we started a conversation, and that morphed into a group of women interested in moving forward with starting a venture capital fund. And we were kicking the tires when Obatala Sciences came to us and needed a lead. And we did. And we stood up the firm within like 45 days. Since then, we've been off to the races. We've invested in 4 companies.
So, Hillary, I'm going to, because you and I have talked in the past just a little bit, I'm going to pick on you a little bit, if that's all right.
Sure.
So how does one go from Vermont to Tahoe? And what does it mean to be like what did you do? You went on a scholarship for skiing? Is that how you ended up in Tahoe? What's the deal there?
It turns out I broke my finger in half March 13th of my senior year of high school. And the schools I wanted to ski for wouldn't accept me, and they wanted me on their JV team. So the one team that was willing to take me in my current form, not being able to lift and sort of out of shape, was Sierra Nevada College in Lake Tahoe. So I came out here in August of that year, sight unseen, and have never looked back.
Like, I'm fascinated by the fact that you're a venture capitalist and was it Olympic development, collegiate skiing? I mean, so you're an athlete essentially, right?
Right. Well, I think it's how I'm a venture capitalist is I'm a risk taker. It's the same reason that I'm also a sailor, that we have this like burning desire to I call it like doing something like stupid and like that, like quest for adventure. It's like that need to like find out what's over that next hill. It's just like this like drive I have. And like I can say that like if you ever meet someone who's come off being a ski racer, we had to learn how to do dryland training, to be on the hill, plus do academics at the same time. We're really good at like balancing all of those things together. And that makes us like really hard workers.
So it's always amazing to me to meet another athlete. I mean, I'm a former collegiate athlete, college, right? And what it does do is it creates discipline, right? You are
Right.
either training, playing, practicing, or you're driving through your academics, right? And so you have to
Right.
have that organization and discipline and everything that comes with it. And I just think with a ski racer, I mean, you're plowing new ground through powder some days, and some days you're coming down the hill as fast as you possibly can. And I think that there's definite parallels to what you do when you work with startup companies and when you get into venture capital. So thank you for that. I'm now going to switch over to Dr. Jenny Kuan.
Cian, thanks so much for having us. I am an assistant professor at Cal State Monterey Bay, CSUMB. I'm an academic. I still am. I went to grad school for my PhD because I was interested in nonprofit organizations. That's a super unpopular topic in business schools. And so, but I just loved it. I just thought it was so interesting. And once I started thinking about it, I was seeing them everywhere, places you don't expect to find them, kind of hiding in plain sight. So an example of this is, like stock exchanges. Those used to be nonprofit member organizations. Most people don't think a lot about the New York Stock Exchange or the NASDAQ, but they were nonprofit member organizations. So they're kind of hiding in plain sight. And another place where they were hiding in plain sight was in venture capital. So Western Association of Venture Capital was an organization that helped to solve some business model problems in venture capital back in the late 60s and early 70s. So it's a piece of economic history that a lot of people don't know. And what I realized was how fascinating that organization was, how collaborative everyone was. And I just thought this was information that people should know, including women who might think that venture capital investing is kind of a tough, scary place. In fact, it could be, a really collaborative, fun place where you're helping people. And that was sort of, I thought, more women should know about this. So I started the class that Hillary talked about. I had no intention of actually doing this myself. I'm an academic. I know my lane, and that I plan to stay there. She really got me to try it, and I'm just really glad that she did. I definitely wouldn't be doing this if it weren't for Hillary. We wouldn't probably be doing this if it weren't for Obatala Sciences, which is the first company we led. And I met the founder when I was at Tulane as a visiting professor, and again, had been talking to Trivia Fraser, the founder there, about my research on venture capital contracts and things like that. And again, completely planned to stay in my lane as an academic. And the next thing we knew, she needed our help, and we thought we could do something. And that's how we got into this whole business.
So Jenny, but I mean, I always thought you were an engineer by training.
Yes, as an undergrad and as a master's student, I did industrial engineering.
So wait a minute, let's tell everybody where you did this stuff at.
At Stanford.
And then you went from Stanford to where?
So I did my PhD at Berkeley.
Right. So we have Dr. Jennifer Kuan, right? Stanford, Berkeley, now Cal State, Monterey Bay, right?
Right.
So for everybody who's listening, right, you've got a career academic with a pedigree of Stanford and Berkeley. You've got an athlete, right, who got through undergrad as a ski racer, and a class that gets taught. It's a serendipitous collision, right? And then all of a sudden, poop, out comes Être Ventures. So first off, explain the name, right? Explain why you two hit it off, and then explain your thesis.
Well, I can explain why we hit it off, and I'll let Hillary explain the name of the company. Hillary presented her crowdfunding company. It was a crowdfunding lending company, and I attended that presentation. I was just impressed by the way she thinks about finance and where the opportunities are for small businesses, and just kind of the creativity, the attempt to innovate in that area, kind of an area that might be kind of stodgy and it's kind of unglamorous and most people aren't really looking there. And yet she was finding some really interesting opportunities, some gems, that kind of thing. So I thought it was just ingenuity and cleverness, and that's what I saw in Hillary's company. And I'll let her explain Être.
So Être is the name of my old sales and marketing firm that I used to have, that I had shelved a year or two previous to meeting Jenny. And so as we're starting this fund, as I previously mentioned, that we needed a name to lead Obatala Sciences round. So Jenny and I we looked at every single tree, mountain, rock, constellation. I mean, we were down to ocean fish. Everything was taken in the venture capital world. So it came down to either we put our names together, because that wasn't taken, or we come up with something else. So I was actually.
So you're going to be Hill Jen or Jen Hill?
Right. We are going to be Kuan
Tal
or something. Yeah. Like, this is like how bad this was. So anyway, it was the first weekend of December and I was in Tahoe and I had come up to celebrate my birthday. And I'm like, all right, do or die Monday. We're meeting with the lawyer. Like, we need a name. So you have 4 hours to think of this thing. I'm like, oh, light bulb moment. I have this brand shelved and everything ready to go down to business cards. I have a website that's shelved that we can redo. And there you go. So I texted Jenny and I'm like, what about this name? It's the French word to be, which fits really well with venture capital. And there we are.
Hillary, how did you learn of and meet Jenny? We heard about the class. And then, like, the moment you both said, yeah, we need to do this.
Obatala needed a lead. And so Jenny said, let's do this. And I said, okay.
It was that simple. It was Obatala. So, for everybody who's listening to this, we interviewed Trivia Frazier in our last podcast. So if you want some background there, you can go back and listen to Trivia's interview. But knowing what they're talking about, which is Obatala had a term sheet in front of them that was not necessarily the most, shall we say, best structure for them at the time. You all, along with Health Innovation Fund 2 at Auctioner Ventures, came together to co-lead this round. And truly, if it weren't for the two of you forming this fund, Obatala wouldn't have had a lead for their Series A.
Based on our conversation, I sort of have a long history of like leaping, for example, not coming to visit Sierra Nevada College before I came as a student. I have like sort of this long history of like jumping and hoping that there's like soft ground underneath. So this was one of those times that I'm like, okay, let's just do this thing. And I went through several of my mentors and I thought at some point one of them would be like, hey, this is a terrible idea for these reasons. I really did. I got down to my accountant, who's been a longtime friend, and I took him to lunch. I said, here's what's going on. What do you think? He said, congratulations, you've earned a seat at the table.
Wow.
So it's just been like, I can't describe, like, it just feels like we're flying at 30,000 feet. And like, this has been the most fun I've ever had.
And Cian, I love that you're asking these questions because honestly, I never saw Hillary's side of any of this stuff. For me, it was just like, surprisingly, this seems doable. Let's do it, you know?
Right.
Totally. And it's just like, I didn't like talk to that many people. I mean,
again, you've got somebody who is building and flying a plane at 30,000 feet and is having a lot of fun and isn't afraid to leap before she looks. And then you've got the academic that's like, no, we need to research this. There needs to be at least 20 different cited pieces of literature. Like, it's just, to me, such a phenomenal balance between somebody who studies venture capitalism, venture capitalists, those type of networks, entrepreneurship, and then somebody who's actually doing it, coming together and saying, no, we got this. Let's start a fund.
It really is the in every movie where they cut between somebody in a car chase and then it cuts to the somebody else who's like reading a book with jazz playing. It's just cutting back and forth between those two.
It absolutely is.
I love it.
To have a venture fund, you have to have a thesis, and you have to have the two founding, in this instance, two founding members or the managing partners and directors to agree to that thesis. So talk to me about your thesis and why you're so passionate about it.
Before we even contemplated doing, going into business together, I think Hillary and I had conversations about all kinds of things. One thing where we found, common ground, I guess you could say, is interest in seeing more female entrepreneurs. We thought more female VCs could help fund more female entrepreneurs. I think a lot of people think that. And so that was something we both care about. We both have worked in and care about and are still interested in manufacturing. So that's another area that's been has gotten less attention from the venture capital community. Manufacturing, at least in Silicon Valley, is something you kind of try to avoid if you possibly can. And to wit, fabless semiconductor firms. So they have no manufacturing. That's sort of the point. And so those are sort of things that we were both just really interested in. seems pretty easy. So despite, kind of like maybe the car chases and the reading the book, kind of differences, I think we both are super interested in, these things at least, and there's other areas of overlap too.
So your thesis right now is you focus on funding female-founded companies.
And I would add to that minority and geographically diverse companies. And so from my work through the SBDC, private clients, as well as the California Manufacturing Technology Center, I have met in the venture space, at least 50 fundable companies that no one is interested in. And as soon as you sort of look, quote unquote, like off market, there is so much low-hanging fruit out there. And when I think about how America is going to compete through the rest of this century, that we're really doing ourselves a disservice by only investing in Silicon Valley. That venture capital really needs to be everywhere throughout the US. And I really commend Jenny for starting this class and just leaping, because nobody else is teaching women how to raise venture capital funds. If we're going to compete moving forward, I mean, venture capital is the R&D of humanity. We really need to build it as much as possible, and also at the same time look for those models of companies that can't deliver the X return that venture capitalists are looking at and deliver a lesser return. Well, they're still fundable, but we just need to come up with the right model to be attractive to investors. Anyway, the way I think about this is like, at large, what we're looking for, if we could just move like 1% of our money from Wall Street to Main Street, we could fund every startup in America several times over.
Yeah, we really do talk about the bi-coastal nature of venture capitalism, with a third coast starting to show up in Texas, maybe a little bit, but truly it is bi-coastal. And then these flyover states or non-traditional areas have phenomenal companies that just don't then get the attention and then the necessary dollars to take them from idea, pre-seed, seed, and onwards. So it is hugely commendable. I mean, Obatala sort of fits your thesis perfectly, right? So female, African-American, with some manufacturing in a non-traditional location.
Yeah.
Right.
And what a great way to launch the fund.
What I didn't realize when we were moving forward with Obatala was the difference it would make to lead, that many venture capital funds never lead around. And so by us saying that we've led already coming out of the gate, it frames the conversation in a different way, I think. And Jenny and I are happy to talk about that. Valuing a company wasn't difficult. And we did a variety of methods and all came up with the same number, which was very cool to see, or about the same number.
So talk about that process, because I know I was sitting on the other side of the table with you guys, right? And that deal with Obatala. And I had the honest conversation of, I'm not the guy that could do the valuation, right? I'm not the entity that should be doing the valuation, that we needed that external third party expert to come in and do that. And you all stepped up. But then also talk about what it means to lead, right? Not everybody understands that you get to set terms, you get to set valuation, you get to do some fun stuff.
The interesting thing about valuation is that there's actually a right number. And so the trick is finding it. It's an art, not a science. And so it's kind of surprising that there's an actual correct number for the value of a company. There are a couple of ways to do it that, and we, as Hillary said, we did a couple of different ways of trying to estimate the value of the company. One is one that people are really familiar with if they bought a house. So it's a method of comparables. And so just like when you buy a house, you look for a house that sold recently that is like a similar size or similar neighborhood and things like that, similar age, all of that. And you try to figure out how much your house, based on the houses that have sold recently and their features. So the same thing, you can do the same kind of thing with companies. So if you see a company that was recently bought or gone public, you kind of scale it to the company you're trying to estimate, in this case, Obatala. There are things like multiples that people use, and you can come up with like an average multiple from an entire industry and segments of an industry and things like that. So we did that. That was one thing we did. The other method is to do discounted cash flows, which is technically the way you should be valuing a firm. So if you get back down to first principles, that's kind of what the value of the firm is. It's the discounted cash flows for a company going, kind of into the future forever. Obatala was easy because they have revenues. They
Right.
also had some reasonable projections for new lines of business and things like that weren't outlandish. They were pretty reasonable estimates. You can take that and calculate, kind of the discounted cash flows over 5, 10, whatever your time horizon might be. Theoretically, it's into infinity, but you pick a reasonable number and then discount those cash flows. Obviously, the big question is where are the revenues going to go, or the profits, what are those going to be, the cash flows going into the future. With a startup, those are very hard to predict. And so one thing that we did was do 3 estimates. So the worst case scenario, best case scenario, and then kind of the likely, middle ground kind of scenario, assign some probabilities to the worst case, best case, and, likeliest case, and then just did an expected value of those estimates and came up with something that, kind of matched up with the comparables that we did. So it wasn't that difficult. And I think that more people should be able to do it. I think people are kind of worried about getting the number wrong, but risks of getting something wrong at an early stage aren't huge. And if you kind of triangulate to a couple different methods, it's not hugely risky.
Well, and your point of if you get the valuation wrong early, it sets up that company for failure if you're not careful. I mean, what we saw was the difference between the valuation of the term sheet that Trivia and Obatala got, that we just sort of sat back and went, as investors that were already in the company, we're like, that's wrong, that's no. And then for you to triangulate or get at least a confluence of multiple methodologies to sit there and say, hey, this is where it should be ish, right? Here, maybe even a range of like, okay, it's somewhere in this ballpark.
Right.
And then to have you come back and say, this is how we're going to do this and what we're going to do. For the folks listening, what it did was it was a cascade. The moment you came in with that term sheet and said, yes, the valuation is this. And then we said, yes, the valuation is something we agree to, and then said, now we can co-lead. Yeah. And after that co-lead happened and we announced the co-lead, what happened? Everybody else lined up after that under that term sheet and agreed to, what would you call it? The deal, I guess, is the best way to say it, right? What also folks need to know is just how important and what that means to a founder. And then what we were talking about, which was a female African-American biotech in New Orleans manufacturing founder, and how just important that was. It truly was. I think you both need to understand, and this isn't blowing smoke or kissing behind, is how just special that was. You don't see that all the time. And so I hope you both appreciate what you're building and what it means, because it truly is solving a problem in the US. I mean, Jenny, you're sitting in Monterey Bay, Hillary's up in Tahoe, Tucker's over in a flyover state, right? He's in Oklahoma, and I'm in South Carolina. So we got it covered. Where does most of the money land? It doesn't land in anywhere necessarily, maybe some in Tahoe, that's for sure, and maybe some out in Monterey Bay, but it sure doesn't land necessarily in Oklahoma and South Carolina, or even New Orleans for that matter. So please understand how appreciative folks are and how special what you're doing is. So to that point, what's next for you guys?
Last year I would describe as knock down, drag out, again, the most fun I've ever had. I can't speak to how Jenny felt during this, but it just kept going. I think it certainly surprised me where we went, including one of our other portfolio companies is competing for a global award. We, as the first money in, were on a due diligence call with the organization, and it's really hard not to say the name.
You're very
That
excited, right?
I'm trying to like be as vague as possible, but Jenny and I had to do a due diligence call with the organization that puts forward this global prize. So I didn't realize who this organization was until a couple of days before. And then there was like oh my God, I have to prep. Like we have, I want to be as eloquent as possible. And we're on the call with this person, with this company who's doing the due diligence. And they asked us something about where we are with this company and if we'd put more money in. And of course, me being me, I'm like, look, we're like essentially the first penguins that were willing to slide down into the water and tested the water for everyone else and were willing to come in with follow-on funding. I don't know sort of like how else to say that, like, we believe in this company and this founder so much that we're willing to say a statement like that. We're willing to lead in the future. That company is now selected to compete globally. And so we'll know how they did in Paris in May. So since that point, we applied to VC Lab out of Menlo Park, and they help VCs like Jenny and I raised fund 2 and 3 and help them become an enduring fund. So I think sort of where I was going with this is I think Jenny and I needed to have the dust settle from last year and then decide where we are going in the future. And I didn't know if she wanted to raise a fund too, because this was just an experiment. I'm feeling like we're ready and just like the same calm flying at 30,000 feet, and we'll see what happens next. And it's just the right people at the right time. And I just can't explain like how it just feels like the team's in place and it's just sort of happening.
I think that what's so exciting, what Hillary's referring to, like the excitement is not just that we're finding these incredible entrepreneurs to support, but these are entrepreneurs who we stepped in and see, and the Obatala, but where, women, we know statistically women when they do get venture capital funding, they are undervalued. So
Undercapitalized. Yes.
Yeah. And so statistically, we know that there's that bias working against them. And so kind of in both cases, they were getting interest from investors, but our concern was that they weren't getting the right valuations and they weren't being treated the way they should be treated and stuff like that. So there's just a lot to do. And what in some ways is kind of fun, I mean, I guess if you're a competitive skier, there's a contrarian streak here as well, because my feeling, there's a lot of groupthink, I think, or just like following trends or fads and stuff like that. When there's a startup that's getting a lot of buzz, people really kind of like jump on that bandwagon. And my feeling is if people are on the bandwagon, then that entrepreneur doesn't need us. We're going to look literally somewhere else, for entrepreneurs who do need us. So we're exactly the opposite of a bandwagon. And there's a lot there.
There is Jenny, you and I think we were meeting in San Francisco when I was out there in January, and we were talking about the cacophony of the tech bros that are running around, right? Mm-hmm. And the fact that it's real easy to bandwagon out, but we also see cascading failures from bandwagoning as well, right?
Absolutely.
And so again, I can't impress upon you all enough. I know you're in the midst of it, but what you're doing is truly special. It is unique and it is needed, right? To get those, like you said so eloquently, you want to put your money where people really need your help, right? Because if you're in the tech bro group, you don't need your help.
Mm-mm.
I am looking forward to funds 2 and 3. I think the first Penguins fund is going to necessarily be the second fund's name, right? Or something like that, right? Or don't be afraid to ski deep powder, or, let's fly it there, like whatever you guys come up with. What's a question that Tucker and I should have asked you that we didn't?
Oh my gosh.
I don't know. Like, this has just been really fun. I was all, worried about, you want to sound really eloquent, but like, you guys know who I am at this point, and I just need to tell you that like how I view the world is maybe not the most eloquent way of saying it. Yeah, I don't know. Like we talked about what's next. I don't know.
I think the thing a lot of people tend to overlook, and this sort of loops back into everything like similar with the tech bros, is there are so many business podcasts where everything's very buttoned up, everything's very shiny and new. Business is not that clean cut and precise. You're never going to get a good meal from a clean kitchen, and I think that's what we try to bring here. Watching our guests sort of, the first couple questions are very like, yes, indeed, I was born in 1987. I own 3 dogs. And then by the end of it, they're like, so there I was, hands covered in barbecue sauce. I'm in front of the CEO. And it's just a really nice de-evolution. So,
Well, I think that is due to like you, Tucker, and CN. And so one of the things I think that Hillary and I don't know if you could have asked this or should have asked this, but I think one of the things that has pleasantly surprised us is the people we would meet. And there are really good people in the world. And I try to explain that to my students because it's easy to think the opposite. And we at least have been lucky enough to meet a lot of really great people.
Yeah, no, I would agree. I like 1,000%. And Tucker, I wish you would have been on a few Obatala board meeting calls that we had. They were like for a while, they were every 2 weeks on a Friday. And it would start off with having to talk about business, but then it would just devolve and turn into like listening to Hillary talk about her latest date that she went on. And we would cut up and laugh and just have one hell of a good time. But yet here we were helping a company lead its way forward, right? And so, Hillary, you don't have to be perfect and polished. Far from it. Most of the really good ones aren't. And Jenny, I think, we talk about there are really good people out there in the world that are trying to do the right thing, that are trying to make a difference, and the two of you coming together to form Être and to do what needs to be done for these folks who otherwise wouldn't have the right valuation, wouldn't get a lead, wouldn't get the money. And then God forbid that company actually changes the world, right? While also, doing good and doing well aren't necessarily separate concepts.
Yeah.
And I think a lot of times venture capitalists from the outside get a really bad rap that we're greedy, we're mean, we send in babysitters to companies because we don't trust them. Like the list goes on and on of, the bad things we do. But like, I've been so surprised about how collaborative it is, again, how nice everybody is, how everybody really wants to work together, how you can email some of the greatest funds in the world, some of the general partners, and they'll email you back if you want to introduce a company. I mean, everybody's really there to spend time and support each other and talk to companies or give an opinion. And that's just been really nice. I feel like venture capital needs like sort of like a PR campaign about who we really are. And, maybe it would be easier for people to sort of jump in. And I think for founders to understand that they don't need to be so polished and so ready to start having these conversations with venture capitalists, because we want to get to know you and trust you and help build your company versus look at you while you're well polished and ready for funding at that moment.
To learn more about Être Ventures, check out the links in the description. And as always, thank you for listening.